We'll begin by checking the highlights from the USDA's December WASDE report. U.S. corn ending stocks were estimated at 1.78 billion bushels, up from 1.73 billion last month. Exports remain at 2.45 billion bushels. For U.S. wheat ending stocks, there was an increase of 25 million bushels to 974 million. U.S. soybean ending stocks and exports were unchanged. Final estimates for U.S. corn and soybean production will come out in next month's report. Dr. Scott Brown is the Director of Strategic Partnerships for the University of Missouri's College of Agriculture, Food, and Natural Resources. And we always love to hear what he has to say with what's going on in agriculture. Scott, thanks for being here with us.
You bet, Troy.
So Scott, as we start off, the G20 summit wrapped up earlier this month, and a big story we've been following is the meetings with the U.S. and China and how that'll impact trade. Could you catch us up to date on what happened at the summit and where the two countries currently stand?
Well, we certainly see that we're getting negotiations occurring here between the United States and China coming out of that G20 meeting. A lot of interest in maybe the Chinese taking more agricultural products as we move into early 2019. I think we're still really early in that process. At least at this point, I think we've postponed any additional tariffs occurring between the two countries, likely until we get beyond that March 1st deadline as we seek to find a solution to de-escalate what's been going on here in 2018.
So would you think it's still too early to say how that's going to impact the markets come next year?
I think it is pretty early in the process to understand what the true effect will be on markets. Now, I will say this, if we get a successful conclusion and can talk about reduced tariffs on things like soybeans and pork products going to China, it's nothing but a win for U.S. agriculture, and I'd expect both of those markets to respond positively to any news there. I think we're just too early in the process to really know how quickly we de-escalate some of the tariffs that we've seen come into place in 2018.
And it looks like there was some progress on the 2018 Farm Bill earlier this week. What are the main takeaways that we need to know here?
Yeah, so number one, it looks like we might be getting a lot closer for producers to have certainty for the next 5 years in terms of another Farm Bill. In terms of what that means for producers, again, I think more certainty in terms of what happens moving forward for crop producers, knowing crop insurance is in place. Programs like ARC and PLC, although maybe a little different flavor under this Farm Bill, will remain moving forward for the next 5 years. I think the dairy industry is going to be very interested to watch what came out of the Farm Bill for them, where we had the old margin protection program that had upper coverage of $8 in terms of margin. We now talk about another expansion of $1.50 to $9.50 coverage at much cheaper premiums. So I think we have strengthened that safety net for dairy producers here in the U.S.
So you mentioned the dairy market. Of course, that'll be a group that's going to benefit. Do you think we're going to see any optimism in the dairy industry for 2019 as a result of the Farm Bill or otherwise?
I certainly think the suite of risk management tools, whether you talk the new dairy RP program that we have in place today or the Farm Bill that was passed, I think both of those provide stronger safety nets, especially for smaller producers moving forward. In terms of where we go for market prices into 2019, I think we're still going to talk about some expansion in overall milk supplies in the United States in 2019. Maybe we'll get a reduction in dairy cow numbers continuing into 2019, but overall supply growth still growing. That means we either got to get stronger trade or stronger domestic use, both of which have been tough for the dairy industry the past couple of years. I guess at this point, I say, well, I think we will get higher milk prices in 2019, somewhere around 75 cents a hundred, so not a large increase from what's going to be an annual average in 2018 of about $16.20. But certainly a move in the right direction. I guess the caveat here is these dairy markets move pretty quickly with small changes in demand or supply. We could certainly see that again unfold in 2019 and perhaps some stronger prices than where I see markets right now.
And as far as meat goes, as we head into 2019, you think it's safe to say that we'll see livestock production continue to grow too?
Troy, I think that's the one thing we know with certainty as we look in 2019. If we look at red meat and poultry supplies, for 2019. I'd expect we're going to be up roughly another 3 billion pounds in the United States when you account for beef, pork, chicken, and turkey. So I want to make sure that livestock producers remember that's the biggest issue we're going to continue to watch in 2019 is that we are going to have expanding supplies, and it's all going to come down to the demand side to see where prices balance out as we move into 2019.
So what's the top story that you're keeping your eye on as we head into the new year?
I guess there's two issues that I really want to pay attention to for 2019. Number one, African swine fever and the effects in China in terms of pork production. If we continue to see ASF expand tremendously in 2019, that could be a real positive for U.S. pork markets. So we'll have to keep our eye on that one. And I guess the second one for me is just what happens to the U.S. economic growth going into 2019. A few signs things are starting to slow down there, I guess, and just given the sheer amount of meat and dairy products we're going to bring to the marketplace in 2019, we need consumers with more money in their pockets if we're going to try to keep prices at reasonable level for producers.
And as we wrap up here, last question, any other advice that you have for producers into the year ahead?
I certainly think risk management is going to play a key role for them again in 2019. You know, we've gotten used to very cheap feed prices. If we talk about dry weather, getting out to next spring or summer, being able to protect what likely would be an increase in feed costs, I think all of that's going to be critical. So making sure they have good risk management plans in place and execute those in 2019 when the opportunity arises is going to be important for their long-term economic viability.
All right, Dr. Scott Brown, great talking with you today. We definitely appreciate it.
Hey, you bet, Troy, anytime.